Hi everyone. So on this video, I'm going to help you understand that since the markets are falling, how you should react to it. A normal reaction to many of us is, you know what, we'll just go and try to figure out why the market is falling, sell our portfolio, we'll re-enter later when the market actually corrects by a lot, all that stuff, right? And in that entire process, we end up losing a lot of wealth. So it's really important to understand 10 critical points that I'll be speaking on this video. These are exactly the points that I am also applying to my portfolio. So hopefully this macroeconomic data-backed study is going to help you out in terms of managing your losses, if you are on any losses, and how you can effectively navigate through the market in these uncertain times. So point number one is that because the markets are going down, you must understand your downside and look at previous historic events which have matched whatever is happening in 2025. So in 2025, three things are happening. Number one, India's GDP or growth rate is slowing quite considerably. We recently posted around 5.6% growth rate, which is very slow. So this is problem one. Problem two, INR has fallen compared to US dollar at its all-time low. Problem three, there are a lot of issues around taxation. People are paying really high taxes, not getting much in return. There is general dejection. Okay. So if we try to figure out a similar phase in the Indian economy in the last 10-15 years, then 2013 is a great year to do that study. So in 2013 also, the INR was at its weakest. There was a lot of corruption related issue with UPA too, all that stuff, we already know that. Third related point was that there was a general sluggishness in the economy back then. So what happened to the stock market? So let me show that to you with the data, right? So this was 2013 and this was the 2013 high. You will see that the market fell by 18%. Okay. Now this is important because let's imagine that you put your money somewhere here, right? At this point around 18th November. When were you able to remake that money, right? So, okay, so आपने peak पे invest कर दिया था. So then you were able to recoup all that money by November. So ये November का data है, right? So you were able to make this. And let's say that if you stayed invested from point A all the way till point this, right? Point C. So how much returns did you make? So you made roughly 44% return, right? In how much time? So ये करीब करीब कितना हो गया आपका? Right? This was 13 and this is February of 15. So this is how much? May से लेके February. So करीब करीब 2 साल हो गया. So here also you ended up making how much return? You ended up making roughly 23-24% CAGR, right? This is very, very important point to note. I will recap this because the concept here is really important and pertinent, whatever is happening in the market right now. See, at point A, you invested at the peak of the market. Then the market fell by 18%, okay, 18% from its top. And I'm assuming that you did not make any investments when the market was falling. In this entire zone, you did not make any investments. And yet, within a period of 2 years, you are generating a CAGR of 23-24%. Okay. Now, of course, a lot of counter arguments will come that, you know what, boss, there was change in government, they incorporated like new policy, vagera, vagera. See, here, macroeconomics wise, some key changes will happen in a country like India. In the world, macroeconomics keeps changing on literally day-to-day basis. So some trigger events are going to take place somewhere in the world. So it's not as if that we can just credit it, keep okay, you know what, government change ho gayi, isliye 23-24% CAGR mil gaya aapko. Okay, it doesn't work that way. What I'm trying to tell you is that see, right now, sitting in 2025, you might be looking at your portfolio ki yaar, you know what, boss, mera 10 lakh ka profit chal raha tha. Then the market corrected by 12%. So then I'm down to like you know whatever, like 8.8 lakhs or something. Okay. And you will feel a little bit dejected. So the point I'm trying to tell you is that see, it's very, very important to understand that the markets will recover. Okay. Macroeconomic changes, for example, INR falling or GDP slowing down, these are cyclical things. As long as we are a structurally okay economy, we will come back up. This is the hope that I can give you. This is point one. Point two, or the second key takeaway is very simple, that see, if people would have invested in this phase, in this market, when things were going down, they could have made a lot of money. So this brings us to point two, that if we relate this to the 2025 market, so dekhte hain ki kya chal raha hai, right? So here we are in 2025 now, the market has corrected by roughly 12.5%. Okay. If the market cuts its previous high, if it goes back, then there's a 14% gain to be made. This is a good amount of gain. Now, I don't know how exactly the market will function, right? Whether this recovery will happen in 6 months or 2 years or whatever it is. But the important point to note is very simple. That see, this thing will be made up. Okay. Now, why this will be made up and how exactly will this be made up? This brings us to point number 3. Okay. See, what is imminent? Interest rate cuts are likely to happen. Now, why are interest rate cuts likely to happen? Because number one reason is that India has not cut its interest rate yet. Western world on the other side, whether it's US, Europe, they have already cut some of their interest rate. Interest rate cut karna matlab ki ब्याज की दरें, right, which is the lending rate, right, in the economy. If it goes low, then what will happen? Then your EMI payments will also go low. More people will borrow money. If more people are borrowing more money, more businesses are borrowing much money, then what are they going to do? They are going to do capex expenditure. Now here is a video that I had done on analyzing India's economy, and there I had explained you the point that almost 60% of our GDP comes from consumption. Now whenever the interest rates will get cut in a country like India, then what is going to happen? This lending will become easier. All these things are going to accelerate, and that is going to benefit the stock market. Now, because US, Europe have already cut interest rate, India hasn't cut its interest rate, it is very likely that this year, in fact, in the next Monetary Policy Committee meeting, this decision could be taken that, hey, we are going to cut our interest rate. Especially why? Because there is a lot of heat that the current political parties are getting, because our GDP is slowing down dramatically. So to accelerate that, they are going to cut interest rate, and that is going to be a major trigger point for this market recovery. Till then, bhai, kya ho sakta hai? Yaar, 2-4% aur gir jayega. I mean, right now we are sitting at like, whatever, 12-13% loss. भाई वो 2-3 होके right 18% पहुंचेगा. Now you will say that, okay, how can you be sure that it will only be 18%? It will not be 40, 50, 60%. See, what happens is that those 40, 50, 60% triggers जो हुए थे 2008, market had corrected by 66%. In 2000, right, again, the market corrected by almost 60%. Now these are called as macro trigger events at a global scale. For example, 2008 was a real estate crisis. It was the subprime mortgage lending crisis. 2020 COVID tha, 2000 mein dot-com bubble tha. So this was like at a global scale, okay? So whenever this happens, the market goes into a depression. The market goes into a bear phase. Bear phase means that the market corrects by more than 20%. Now these type of corrections are rare, okay? These type of corrections where the market is correcting like 10 to 15% के आसपास, this happens very frequently. In fact, let me show you the data also, right? I had shown you earlier, but I'll just be quick in terms of showing you. For example, आप यहाँ से देख लो, right? Data आप 2021 से देख लो, right? So this was like one phase, right? मैं roughly draw कर देता हूँ. 1, 2, 3. At least 4 instances हैं where the market has corrected by more than 10%. So this is not the first time the market has corrected by 10% and इतना panic मच गया, okay? So these are 3-4 central points that you should know कि भाई जितना भी पैसा गिरा है, and if you invest in this phase, और अभी अगर आप bulk buy कर सकते हो, if you are left with money, then you should definitely do it. All these tricks will allow you to make an alpha. What do I mean by that? For example, abhi 14% market is likely to go up. Now, this is not guaranteed. It will go up maybe like in 6 months. Maybe it will go up in 2 years. Who knows? But the general return of the market is 12. That is for an average market. Ki 12 se 13% Nifty gives. Okay. But if you're buying the market itself, when it is 12-13% cheaper, there will be an alpha that will be added to this. Okay, so therefore, this is a great time to bulk buy. And am I bulk buying? Yes, absolutely. I'm buying like individual large cap assets also. I'm buying Nifty 50 also. I'm investing in the US market also. I'm buying unlisted stocks also. In case you guys are interested in learning more about how I do all this fundamental analysis, give you a point-wise analysis of different assets, definitely consider joining my courses. Everything is taught from start to finish. There is a new batch that we are starting in March. It has limited seats. Almost 60% of the seats are already full. We are expecting that by this week, it will be completely gone. This is a live course, 95% completion rate, क्योंकि लोग सिर्फ कोर्स लेके छोड़ देते हैं, करते वरते नहीं है when they are joining any online course, but my course has a 95% completion. You can read some of the testimonials, go through the entire page. I'm a market practitioner. हवा में बातें नहीं करता. I actually invest my own money, generate returns, right? So you will learn a lot. So definitely do consider checking it out. In case you don't want to make that commitment, and if you're a new investor, just join my member community. You will start at least with the basics of things, and then you can upgrade it to a course in case you feel it. So, okay, so with that said, let's move to the next point that, okay, this is the down market. There's an alpha to be generated. There's a very high chance that if you put the money now, right, in a safe instrument like Nifty 50, you can easily expect a 15% CAGR on 2 to 3 year basis. This is the rough math that I can tell you, and the past data proves it. So now comes the next point that if you analyze your portfolio, now portfolio का मतलब ये होता है कि let's say that you have like 20 stocks in your portfolio, okay? And out of them, let's say maybe like 5 are in a loss, right, red में, and let's say 10 are at a profit, right, and 5 आपके neutral type के stocks हैं, okay? Now what you need to do is that you need to do a portfolio audit. Now what is the meaning of portfolio audit? Usually लोग सोचते क्या है कि see, if I am holding like let's say Hindustan Aeronautics, right? I purchased it at like 5,500. Now it is at like whatever 3,800. I am at a loss, right, of like whatever 35%. So I will not sell this, or I will downward average it. This is madness. This has nothing to do with like stock being at a profit or stock being at a loss. Nahi, that's not the goal. The point is that you are looking at the price of HAL today, right? As of whatever like 15th Jan, right? You are looking at this price. Now, is this the right price to hold this stock or buy more of this stock as of today? That's the call that you need to make. If 3,800 today is not the right price to pay for this stock, if it still looks overvalued, then by bech do, even at loss, you should sell it. On the flip side, if you feel that, you know what, boss, 3,800 is a wonderful price, it will definitely go back up to 5,500, then khareed lo, right? It's as simple as that. But the point is that you will have to make this bet. You have to learn how to do this analysis. And again, I'll ask you to do check out my course. I teach all this stuff. But coming back, how you can quickly ascertain this, right? So take a look at the profit growth rate of a company, right? So here it's sitting at all-time high profits, all-time high revenues, all-time high profits. Looks wonderful. Okay, no problem there. But what you would notice is that, see, boss, if you take a look at the last 5 years, how much has the stock price gone up by? From 2,600, right now the stock price is roughly like whatever, 4,000. So it's how much? So roughly it's like 12-13 times. अब इसमें 12-13 times business हो गया है, right? From 2020 onwards, right? So यहाँ पे the total business was 21,000. यहाँ पे it was at 31,000. यहाँ पे 2,800, right? ठीक है, मतलब the company has done well, but has it done like such great work that you would want to hold it at 3,800? This is point one. Point two is that you are buying a fairly large cap company at a PE of 30. Okay. Next point that you need to analyze here is that, see, you are analyzing this stock in your portfolio. You need to ask that, hey, why did HAL grew so much in the last 2-3 years? The reason was that it was government spending. Now, what is the focus of the government? Again, please go and watch my economics related video where I have analyzed India's GDP. There the idea was that, hey, 60% of our GDP comes from consumption, private consumption. Okay, private consumption. This has been in tatters. This has just gone down very aggressively over the last 2-3 years. Companies like Hindustan Unilever, companies like Nestle, companies like Asian Paints, all are struggling. Why? Because private consumption has gotten killed. What has happened in the last 2-3 years? Well, the public or the government expenditure, that has gone up. Now, who do you think supports this, right? Government expenditure supports this. But is the focus of the government right now to spend money themselves, or is the focus of the government to push this bucket? This is a call that you'll have to make and then judge कि यार 30 का PE देना यहाँ पे sensible है कि नहीं, right? I'm not giving you a yes and no, you yourself judge. This is how you need to analyze each stock in your portfolio. There are a lot of themes. For example, जैसे Asian Paints को लेके लोग डरे हुए हैं, right? कि भाई Asian Paints खत्म हो गया, this that stuff. Okay, so let's quickly do a analysis of Asian Paints. See, point number one is that if you do a peer analysis of Asian Paints, you will see कि Berger भी उतनी PE पे है, Indigo Paints भी roughly उतनी PE पे है. So it's not as if that, you know what, there is like some issue with Asian Paints itself. This is the typical PE of Asian Paints, right? Our paint industry in India. So the PE multiple kind of justifies, so to say, right? It's not an Asian Paints specific problem. So what about revenues, profits of the company? It's again at an all-time high, right? The revenues are at an all-time high. The profits are at an all-time high. And how much are you getting the stock price cheap by, right? The stock price has been made cheap by how much, right? So it was, this is the recent high, 3,520. So almost 35% low mil rahi hai. Now what is the issue here, right? Ki for example, what would have happened is that, hey, you started buying like Asian Paints here, 3,000 पे, अब now यार it's like, you know what, 2,300, मेरा इतना नुकसान हो गया, right? Whatever, like 15-20%, मैं बर्बाद हो गया, right? See, this barbadi only happens when you are investing more than 5-10% of your capital on one single stock. If you are well diversified, you will not cry this much. No one knows till what point Asian Paints will be consolidated. My understanding is that, see, Asian Paints consolidated here. This is a breakdown of the stock, literally breakdown. Now, if something is fundamentally off with the stock, it's a completely different thing. But what you would notice is that, bhai, trading volume is kitni high hai. Aggregation is going on in this stock. It's not as if that aggregation is not happening. But what you would start expecting is कि कल return मिलना चाहिए मुझे, right? Tomorrow I should get the return. That will not happen. This stock is likely to come back up into its previous zone. Now this is HDFC AMC. I had purchased it somewhere here, right? Again, videos are there. You guys can go and watch it. This was the phase, right? Because क्या होता है कि, for example, this stock was consolidated somewhere in this range. This was the breakdown. Now if you purchase the stock in this breakdown and you held it for a little bit, थोड़ा सा आपने इसमें stress आया आपको, and then it went up. Why? Because there was a very specific macro trigger for HDFC AMC to come back up. That's how AMC industry operates. कि भाई जब stock market बढ़ रहा होता है तो दबा के like they will make commission. When stock market starts to get crushed, they struggle a little bit, all that stuff. Something similar is going to happen with Asian Paint story or like HUL story, all that. Why? Because it's very simple. Because this is based on private consumption. Who is consuming Asian Paints product? क्या सरकार टेंडर निकाल देती है कि हम खरीदेंगे एशियन पेंट्स? नो, you and I have to go and consume that product. Similarly, Hindustan Unilever टेंडर निकाल देती है कि सरकार शैम्पू खरीदेगी. No, it doesn't work that way. You and I have to spend money to buy that. So whenever people get a little bit of relief in terms of interest rate, in terms of taxation changes, etc., they will get more money and all these stocks will be the first one to rally. You just have to be a little bit patient. Okay, so then comes the next point that, okay, fine, all these type of stocks we can pick. What else, right? I mean, what is the next big thing that we need to think of in this juncture? See, basically what happens is that right now the INR depreciating is a very big problem. Okay, now what ends up happening is that let's say that in 2025 1 USD is equal to 86 rupees and in 2027 1 USD is equal to 100 rupees. पहुंच सकता है, बिल्कुल पहुंच सकता है, right? Who knows, right? Now this fall in USD, now why do you think the FIIs are withdrawing money from the Indian market? One key thing is that the yield for bonds in US and in Western countries is peaking, right? So basically they are saying that हमारे साथ FD करा लो and we will pay you decent rate. Now why will investors take this risk in the Indian market? Because for them even they have to deal with like currency depreciation. यहाँ पे for example मान के चलो someone invested $1,000. Now they could buy 86,000 rupees worth of mal in India. Now in 2027, what happened? In 2027, 1 USD was 100 rupees. Now let's say that this 86,000 went to like 100,000, right? Or 1 lakh rupee. Okay. But because the US dollar itself has strengthened, how much money are they getting back? So 100,000 को आप 100 से multiply कर लोगे. So despite so much risk taking, they were unable to make much money. So this is a real problem that is happening in the Indian market right now, that due to devaluation of rupee, foreign investors are leaving. Now this is not just due to devaluation. This is also has to be seen in conjunction with the fact that foreign markets are giving high bond yield on their safe long-term debt instruments. So this is the reason why. Now, ऐसा तो नहीं है कि forever this game will continue. This will not continue. This will stabilize at some point. But for now, what you definitely do need to do is that you at least need to do 80-20 on your stocks. For example, if you are investing 8,000 rupees a month in Indian market, then do try to invest at least 2,000 rupees in the US market. Because when you invest money in the US market, what are you doing? You are essentially changing your INR into US dollar. Okay. And this acts as a hedge against INR. So this is a very important point. I hope you got it. And this is very important thing that you need to do, because we don't know like what the situation of INR will be 2 to 3 years down the line. So therefore, in order to at least have like a 20-30% hedge, start investing 20-30% money in the US market. Then comes the next point that, okay, if you are in a loss right now, then what else can you do? See, this is January, February, March phase, right? And here what you can do is that you can do tax loss harvesting. Now, what is the meaning of tax loss harvesting? मैं आपको बहुत ही simple सी language में बता देता हूँ. So let's say that right now your entire portfolio was 10 lakh rupees. Okay, 10 lakh rupee. Okay. This is your portfolio. This is the amount of money that you had invested, right? Roughly like 1-2 years back or whatever. And during this year, right, because the market ran a little bit up, you booked like 2 lakh rupees of profit, 2 lakh rupees of profits. And now 2 lakh rupees of profit mein, let's assume like deduction aap nahi le rahe ho. What is the LTCG that you will have to pay? So you'll have to pay 12.5% of this 2 lakh, which is approximately what, like 25,000 rupees you'll have to pay as tax on the real profits on which you have booked profits. Now, how you can offset this? So now see, this is your portfolio. This 10 lakh rupee worth is your portfolio. Now, in this entire portfolio of 20 stocks, some of them might be loss-making stocks जो आपको red में दिख रहे होंगे. Now, let's say that you are able to book losses, like real losses of 1.5 lakhs by selling these red looking stocks. Now you can offset this against this. So आपका जो capital gains base बनेगा, that will only be on 50,000. So that way you will be able to defer your taxes to the next financial year. So whenever market correction comes, that becomes like a great time to do tax loss harvesting. Natural question comes, you will say कि अच्छा अभी तो मेरे को ना what Asian Paints red में दिख रहा है, HUL I am seeing it at red. What if I sell it and it comes back up in like another 10-15 days? So you don't have to wait for 10-15 days. You sell today, right? You book loss today and you buy it tomorrow or maybe in like 2 days time. That's good enough. Okay. So that way you'll be able to offset it. So please learn a little bit more about tax loss harvesting. I'll write 1-2 more posts how exactly I am doing tax loss harvesting on my member community. So please wait for those posts. So I hope that this point is clear. Next point, please do sector rotation. Sector rotation means that see, पहले क्या था कि public sector companies जो थी उसमें बहुत अच्छी रैली चली थी. Now money has gone out of FMCG, money has gone out of private banks. All these are good sectors in which money might come subsequently. So you have to pick sectors which are currently underinvested. So invest in that. अभी लोग खिल्ली उड़ाने जाते हैं, HDFC नहीं बढ़ रहा है, HDFC भाई HDFC है आपका सिर्फ एक ही पोर्टफोलियो, एक ही स्टॉक है आपके पास, राइट? HDFC, इसके अलावा कोई स्टॉक नहीं है. No, so the point is that be diversified. At least pick like 4 sectors in your portfolio, right? And if you are adding new stocks right now, then these are some good sectors that you could potentially consider, like FMCG, private banks, all that stuff. So these are undervalued. The money might come into this. Sector rotation might happen into this, and that is when these stocks will rise. Next key point, you need to prepare for an interest rate cut. Now, interest rate cut will benefit consumer spending or private consumption. And here, especially housing finance companies are going to benefit a lot. Why? Because most of the houses in India, especially budget houses, they are purchased on EMIs. Now, EMIs में बहुत difference आ जाता है. For example, 1% difference in EMI creates a massive difference in your overall spend on that house, for which you have borrowed money. So housing finance companies, especially value housing companies, are likely to benefit. So you could study these type of stocks. Now comes the last point. That's it. You need to pray to God. Okay. Now I don't know what's going to happen in the market tomorrow. No one knows. If they are telling you that you know what चाहिए होने वाला है, वो होने वाला है, no. We can run macro analysis. We can re-gear or gear our portfolio in a certain direction. But then we need to pray to God, stay humble, stay away from greed, stay diversified. Okay, सिर्फ एक ही जगह पैसा नहीं डाल देना है कि for example अभी Asian Paints की I did the analysis, now you'll get excited, you'll sell your house and invest all your money in Asian Paints. That's madness. Okay, you should never invest more than 5-10% of your portfolio on any single stock. That is absolutely critical. Otherwise कल कुछ हो गया, कल कुछ कांड कर दिया एशियन पेंट्स वालों ने, कुछ उनकी मैनेजमेंट में इशू निकल गया एंड ऑल दैट स्टफ, then आप सफर करोगे. You will be the last person to know what is happening in the insides of the company. So don't put yourself in that situation. You are investing in publicly listed companies. Be diversified. There are more than 5,000 stocks. उसमें से आपने hardly, like I mean, even if your portfolio is humongous, you would not have to invest more than 50-60 stocks. Okay, so that is more than enough. So you don't need to invest all your capital in 3, 4, 5 stocks. Stay highly diversified. Never invest more than 5% of your capital. I hope that this video will give you confidence to invest. Number 2, it will avoid panic. And number 3, if you're looking to invest money, you will be able to do it more sensibly. I hope you enjoyed this video. If you did, do press the like button and I'll see you soon.